Moving on with our project here on Binary Options Academy, we are at our 20th project here, trading divergences, and on the first part here I'd explain to you the difference between price and oscillator, and normally we should look at a divergence within a time frame. This is a 1 hour chart, and the divergence price should made with the oscillator. Always we should stick with the oscillator because the oscillator takes into account the period that we are looking at. This is 14. That means that on the 1 hour chart or on the hourly chart, the oscillator looks at the previous 14 candles to plot an area here, so not the price. So if there is any divergence, then we should look into buying call options or put options. Anything above the 70 is being called a bullish divergence, is being called an overbought area. Anything below the 30 is being called an oversold area, and we should go and buy call options here. So we should stick with the price. Let's try to stick with the price. So price makes a high here, but the RSI is not in the overbought area. Price makes another high, the RSI is not, so nothing here interesting. Now price makes a high here, and the oscillator makes a high here. Let's try to mark the area. Like this. And then the price goes and makes another high here, but the oscillator is actually not confirming the high, and therefore this is a divergence. This is being called a bearish divergence, so I will make it with a red line here. A bearish divergence because it comes based on a descending relative strength index, as you can see. And as a consequence, we should buy put options, or we should look into buy put options. The divergence is coming into the overbought area. Now normally, this is a 1 hour chart, so normally we should go here when the divergence appears and buy put options. When to buy the put options and with what kind of expiration date, well, that remains to be seen. I would and that depends very much on the time frame the divergence appears. This is a 1 hour chart, so basically the divergence appears even from this moment of time. So either here or here, looking to buy put options, either end of day or end of week expiration date, still it will expire in the money. Now moving forward with prices, you can see price even goes and makes a new high when compared with the previous. Not this one here, because the RSI is not in the oversold, in the overbought area, but this one here, price makes a new high. The RSI goes into the overbought area, but it's failing to make a new high. So this is a second bearish divergence that price made when compared with the oscillator, because the oscillator is falling. So the oscillator is falling, but in the same time price is rising. Again, we should stick every time with the oscillator because it is taken into consideration 14 periods when compared with price, which is taking none. And therefore this, by the moment that the RSI comes below the 70, we should go and buy put options again. And this is the beauty of divergences, as you can choose the expiration date in order to avoid let's say some consolidation in a specific area, and to avoid that and your option to expire in the money. Therefore that would be the place to buy put options. Now this is being called a bearish divergence with the RSI. A bullish divergence calls for when price is moving to the downside. You have a series of two lows, for example, and by the time that price is not confirming your lows, there you go, you will like to go and buy call options. For example, this is a series, this is a low that price made, This is a low that the oscillator makes. This is another low that price makes here. But the oscillator is not confirming that low. Therefore, this is a bullish divergence, and normally, because this is an oversold territory, we are supposed to go and buy call options, and therefore it should be green as to signal the bullishness out of the pattern. So this one goes for being bullish, and therefore we should go and buy call options. Thank you very much for being here. We just look at the divergences between price and one oscillator. In this case, our oscillator was the relative strength index. This is fairbinaryoptions.com, and all this analysis and projects and recommendations are possible due to the help of our sponsor here, Lion Knife. Bye bye.